Hello there, ladies and gentlemen. Karaoke Andi here. And it's once more my absolute honor and pleasure to be with you and trade with you today here in Tom Hougaard's Trader Tom's channel. And the reason why I'm here today and also tomorrow is because we are in a holiday schedule. So this week I do every day the EU and US session, both. Tomorrow for the last time, and then this channel will close until the 24th of August, where I shall return for a whole week, where you get me every day for both the EU and US sessions. And the week after, Tom flies solo, and after that, regular schedule probably till Christmas. Regular schedule, meaning Tom does that every day, and I'll be here on Wednesdays. So, the disclaimer: this is no financial advice. Trading involves risk, and past performance is not indicative of future results. Always conduct your own research before trading. This stream and its recording is for educational purposes only. This stream is governed by the stipulations set out on the website tradertom.com, tradertom.com/disclaimer. Okay. So, with that out of the way, if you have watched me this morning, I was very, very grumpy, very, very tired. I'm still tired. It's really hot. It's a heat wave that hit Prague, and unfortunately, I have air condition here in the south-facing room, so also my little office here. But back there, the bedroom, there's no air condition, and it was just we all couldn't sleep. I had maybe 2 hours, and so yeah, I went to the gym, took a shower. I didn't really style myself, so sorry for the appearance. As traders, we have to be very mindful of what that we are biological organisms, and we can't always perform like machines, right? We're susceptible to how much sleep we get, what we eat, our exercise regime. So if you don't mind, I will take trades, but I will treat carefully. I did so in the morning as well. So that's probably for all our benefits. The markets might be in hangover after the FOMC release yesterday, so they might be range bound. I know I said that yesterday, and then there was a sell-off. Well, we made some points. We could have made more. I was looking into why I was taking half off. I rewatched the recording. I actually misclicked. So that one was maybe a lack of concentration, but that was a human error. I didn't want to do that. I wanted to move stop loss to break even. I clicked on the wrong button in the panel, and that's what happened. So I want to trade today. I haven't back tested that. I just have observed that a couple of times. I want to trade with you the espresso in the Nasdaq. I use a 20-point offset. Put in the long order. Oh, that's what's happening here? Not sure if that will not expand. Okay. So here are the orders. So guys, I don't know, in the US you probably trade all futures, but should there be some CFD traders here, and you use Trade Nation, and you use the CFD and you use CFDs, yes, and you use the trade from chart extension here from Tom that I'm using. Trade Nation made a major update tonight, and you need to update trade from chart, otherwise it will not work. Yeah. So I think Tom made like a ton of announcements. Okay. 80-point stop. I could risk a little bit more on that. Sure, I can. Can I actually? I can increase the size a little bit. Oh. Okay. Indecisive open so far. Or maybe now. Dow would already have been filled short. Low is 69 and this low is 37. What happened here? There it is. Okay. Can we? Okay. It would be short from here. What is that? 830. Okay. Guys, I'm deleting all orders. Deleting all orders. We're not filled within the first 3 minutes. Or shall we just shoot from the hip? Ah, come on. Fuck it. Let's go short. Okay, I pressed on sell short. Press sell short again. I have no position open. Interesting. Separate views. Okay. Okay, maybe it's good that I don't have. Okay, nothing done. Nothing done. No open orders or position. So I have to report this this bug. Okay. However, I want to sell short the Dow Jones. I can't again. Oh, this is unbelievable. Selling short the Dow Jones. Selling short the Dow Jones. So Dow short. Stop loss here. So edit 51829.4. Stop loss of 51,955.4, just above. So now Herrick, pressing sell on that review didn't work. Okay. Okay. I want to be a buyer of the Nasdaq here, buying the Nasdaq on a breakout. Nasdaq along 100%. Okay. Take it easy today, right? I'm grumpy and sleepy, and there you go. 27,754.7 and 27,609.2. So, okay. See how that works. Okay. Oof. It's the 10-minute chart. Put that a 5-minute. Put that a 5-minute. Oof. Doesn't look too good, huh? Looks like the Nasdaq is rather turning weak. Oh. Okay. Hope you see everything here. But that also means in this window I can't add. Wow. Dow now strong. Okay. Nasdaq weak. Okay, what am I risking here? 0.3 times 120. 0.4 times 85. It's okay. So I have to probably separate those views here. So about that. To be able to add to my positions. And now you don't see all of that, right? That is crappy. So what that? Can maybe use that grid view here. Yes, Tech, Wall Street. There you go. Okay. Adding to my Dow. $51,786.2. Oh. I want the same stop at 51,786. 21,955. So let's make that real. Oh shit. I had the chance to get out in the Nasdaq. Not a fan. Huh. Okay. Dow, however, looks good. Okay. So guys, I'm closing the Nasdaq for a scratch and I'm taking profit in the Dow Jones. Closed everything. So, okay. How much did we make? Dow Jones. Okay. On Nasdaq. Scratch on Nasdaq. Minus 3.3. Big profit in Dow. Plus 61.4 and plus 103.1. So sorry that I still need to get used to that new interface here. It was a little bit stressful for me to manage that. Why did I get out? I hoped to. Let me show you. You see, that doesn't really work for. Okay, Nasdaq is actually breaking out now. Oh, okay. Interesting. I'm not running after it. But I closed at 724, so I can show you here. How's that for an exit? Here. So I was simply looking left at that swing. That's it. Because there's some sort of channel here. We broke out of that. Of course, that's pre-market and overnight. Right, so take that with a grain of salt. But the Nasdaq showed some. I know we look at that. We opened up gap up in the Nasdaq massively. That's why I wanted to be long. And but in the Dow we also gap up. So this here being a fake out, and we find some buyers here somewhere at a lower swing, or to me was a risk. So overall the sentiment rather bullish. That's why. Oh fuck, that doesn't sit well with me. Oh shit, should have stayed in there. Naja, anyway. Hope you're long Nasdaq, guys. I'm not. That's like a laser beam. Oh shit. Oh shit. Oh shit. What have I done? But it it's not like I wasn't making that up, right? My multiple times here, my stop loss was in danger. See that? And now we broke out of that. Wow. Okay, where do we go? Let's look at the hourly. Yeah. Maybe Maybe to up here even. Wow. Oh man, I feel like, well, yeah, classic Andi. Yeah, what was in, close being too flimsy, and then that thing shoots up, right? But at that moment, honestly, I didn't have much conviction. Let's be honest. The lower end of my stop loss was tested a couple times, but look at the espresso power here, huh? Yeah, but you would have to take the flip, because here you also would have been filled ever so slightly. Huh? And since we came all the way back up here, so I thought it's a good idea to buy that. And I was hoping for that breakout to happen here when I bought it, and then it retraced, and then I had to flip between two screens, and now I'm trying to justify whatever I was doing there. Fact is, this motor's on, and I'm not in. Okay, so, but we made some points on the short side when everything is shooting up. Well, how's that? So, ladies and gentlemen, my concentration is not really where it should be. You've probably realized that. 2 hours of sleep, grumpy Andy. I want to rather do this session a little bit more educational, if you don't mind. So we've made some money. Could have made much more. I'm the first one to admit that. But hey, it is what it is. So, but now it's time for education. And there was yesterday the rule of 4 situation. Let's see if we find that. I don't know actually. When did Tom take the long position? Let's reconstruct that. I always don't remember at what time the news releases. So, yeah. At 2040. So at 20. So, and then 1, 2, 3. Am I on the 10-minute chart? No. Why do I have to scroll all the way? So let's see if we even find that. 1, 2, 3, 4. So first 10-minute bar, second, third, fourth. Rule of 4 dictates that we go 1, 2, 3, 4. What is happening? Why is this happening to me? Okay. Yeah. So once that bar here concludes, we put a buy order above and a sell order below. So, and Tom has traded that in all the indices. I'm just showing that for the Dow Jones here. So the high came in here at 52.020. So let's just take the position with a little bit of offset. So let's just measure that. So, and you can see that that position was 200 points in profit. And so were all the other positions. And then 5 minutes later, at 20:45, so probably when that bar concluded, the bar closed here, Tom said stop loss to break even. So stop loss would be down here at 8.22, and he put it to break even. And then this happened, and Tom got stopped out for 0, right? So can, of course, talk about what will happen if you took the flip down here, but that was not the point. The point was that some people got mad at him for, not taking profit on a position that was 200 points in his favor. Oh, excuse me, I have to mute a chat here. Was it something that... No, it doesn't concern me right now. How do I do that? Let's do it just for 8 hours. So, yeah, so Tom received some messages that were, let's say, not encouraging. And I would just like to hear your opinion. So, creating a poll here. Yes, no. Now I would ask you to take your vote on this, right? And just tell me, what do you think, your honest opinion? Should Tom have, in any way, shape or form, taken profits? Maybe lock something in, maybe take half profits, scale out, however you call it, close the whole lot. So we have so far, I believe, 200 votes. And you can't make it up. It is exactly 50-50. Yeah. So 50% of you say yes, and 50% say no. So now it shifts a little bit. Now we have 53% yes, 47% no. But I would say it's a more or less balanced opinion. Slightly more people say yes, he should have taken profit. So, and my take on this is there is no right or wrong answer, but the answer reveals a lot about who you are as a trader. So, and some people might really, let's say, what makes you more angry when you see something like that in the Nasdaq and you closed here for -3. Your stop loss was, yeah, okay, it got close, but it wasn't really in immediate danger. So, and you could still be in here. So 228 points at best so far on the table. Pretty much what Tom basically let go back to zero, right? So what does bother you more? That you have been in there and closed only to see that the market goes on in your favor, or that you were in there, had profit-taking potential, and then got stopped out to zero, right? So what bothers you more? And Tom has a specific philosophy behind his trading, and this is my take on this. This is how I interpret the situation, right? And that's basically what Tom is all about as a trader. I think Tom is of the mind that if you ever want to be in a move like that, maybe this is a trend day, right? Maybe it starts down here, and it ends up here. So imagine then on the way up, you add and add and add, maybe here on the aggressive school run or whatever it is, right? So and then you don't take half profits or partials or whatever. You close at the end of the day, and your position got bigger and bigger. Maybe you added 10 times, right? So you started at 0.5 lot, and you maybe then the position you're trading 5 lots now because you have 10 positions open, right? So, and then instead of taking half off at plus 200 and then closing the rest at plus 300, which is really just plus 100 and plus 150. No, you close at plus 5,000 points, and that's how Tom made his fortune. And if you don't have that mindset that you're okay with your stop loss getting hit, maybe you moved it to break even already because you have created a large enough buffer. So then you will never be able to ride that whole move. Look here, you would probably add on the school run again, whatever it is, right? So can that reverse? Of course it can. But that's the idea. So it doesn't mean that you disregard price action and market structure or whatever. So, and I mean, look at that. We have been here basically in a more or less in a indecisive market. You see small bodies here, overlap sideways movement. We had at the beginning of the press conference or whatever that comes first. I always don't remember. So here the bulls tried to break out, and then probably as the guy that kept talking, they were like, nah, not so fast. And only here, after the 4-minute bar, could we see a clean breakout, right? And a bull bar that closes above everything on the left. So can you blame a trader to stay long, right? Because see how much that that opposite move went. So you see that? It's like 785 points. So that's the thing. And Tom rather wants to make 785 points than 200. Yeah? And he's okay with being stopped out for zero. If you're not okay with being stopped out for zero, and I'm fighting that urge also, I'm of two minds there really, then by all means, take something off, right? But if you follow Tom, and Tom gets stopped out for zero, and you get angry for the wrong reason, because behind Tom's actions is this philosophy to always go for the jugular, right? That's a high stakes day trader with an enormous appetite for risk. Yeah. So but I believe price action wise, with this bar here closing at its high, I probably wouldn't blame any other trader to stay long. You know, there just was no follow through. Also after this bar, you know, Bears didn't really do a very convincing job there, right? We're trading there in the upper quarter still of the previous bar. We already superseded that. Yeah. And then, okay, then you pull back more. And at one point you say, okay, what can I do? Stop loss is in place, right? And then this happened. Well, I personally, I wouldn't be angry. I think Tom did his job. He got you into, by the way, in 4 markets, right? Into that move. Tom's entry techniques are just that, they're entry techniques. The exits are always discretionary, right? It's up to your discretion. So use that to your advantage and make it fit your own trading personality instead of just blindly relying on somebody serving you points. Tom has success as a trader because he trades the way he trades, but following Tom requires an understanding of that mindset, of that philosophy behind that, and also being a good loser, right? Because if you get angry that your P&L goes into a drawdown, and you take it personally, you will probably then stop following Tom 100%. You will fuck around with the next positions. Will get out prematurely. Oh, Tom is doing one of those again, and whatever, and then you will miss the recovery trades. Right? So you have to be of that same mindset. Who are you following and how Tom acts, right, and why. So, and if you want to replicate Tom's success, it's probably that's the way. You have to be okay with this position going back to zero, right? Can you be a successful trader by scaling out of that? Probably yes. Right? But there's absolutely no doubt about that. Half profits versus a position that you have added to multiple times are inferior, right? So that's my take on it. I hope that helped. Again, nothing wrong with it. Just understand the philosophy and don't be angry at somebody who is acting upon his convictions, right? In such a, and demonstrates that life to you, putting his own money on the line, like a lot of it, right? It's not, I trade relatively small. I risk here, I don't know, something between 60 and $100 per trade. Tom risks multiple thousands. It's different, right? So that's that. So Tom just said, Dear everyone, I'm not one to take credit for other people's work, so when you send me messages of love and support and great trade while Andy is doing the work, I feel you should know they land in my private message inbox. If you want to send a message of support to Andy, then please do so by directing the message to Karaoke Andi. Thank you. Okay, so no worries. I receive a lot of love, and so does Tom. I'm sure about that. This is only that the hate always stands out a little bit more. I don't know why. I actually the overwhelming feedback of you guys is very positive, and I'm sure it's the same for Tom. So then I have another gentleman, Henrik, who wrote me. Hi Andy, thanks for a nice grumpy morning stream. Could you give me your take on my behavior? Yesterday I traded like Tom. So it's maybe good that I addressed that before, because philosophy behind how Tom trades is maybe not always so clear to everybody. So, but Henrik says, yesterday I traded like Tom. Today I chased the market, took too many trades, lost a shitload of points, took trades that I should not have, as I only want to take espresso, first bar, ASRS, SRS. Why the F does my discipline bounce like that? And what to do about it? Best regards, Henrik. So, why is that, ladies and gentlemen? I believe after reading Tom's book and Mark Douglas and Steve Ward on the mental aspects of trading, it's all, look, it's just a model, like you use the Bohr atomic model in school still, even though that's long since disproven, right? But they still use it to just explain fundamentals. So when I talk about the reptile brain, is that really, would a neuroscientist agree? I don't know. I'm not a neuroscientist. Just, it's a model to explain something, right? So, and what we have here is a million-year-old operating system that is basically there to protect us. Now, imagine you're in the wilderness and there comes that saber-toothed tiger jumping out of the bush at you, and you would just look at that cat, you know, with a rational brain. Oh, nice teeth. They look like sabers, and the claws are magnificent. And what a nice fur. I wonder if that cat is dangerous. Yeah, you probably would be dead, right? So you need something that takes over and floods your system with adrenaline or whatever you need in that moment. Fight or flight or freeze, right? So it makes sense for survival. However, it's completely not working in our favor when we trade, right? So that old operating system, Tom would say, is there to protect us from experiencing pain. And why do we take profit early? Because we want to avoid the pain of that position going back to zero. It's painful. You got mad, you got angry, you wrote to Tom, what the fuck did you do there, Tom, right? So that's why you take profits too early, and that's why you're probably not profitable, right? So that from somebody who got out of the Nasdaq. Anyway, I don't have it all figured out, ladies and gentlemen. I'm trying to explain here something, right? I try to. I'm also on a journey here, right? Maybe I've figured out already a couple things. I'm maybe a little bit ahead of some of you. Maybe some of you are far ahead of me. But hey, right? So back to the story. Your reptile brain there wants to keep you from experiencing pain. Also, if you take a loss or two, especially if you want to take it easy. Why do you want to take it easy? You want to take it easy because you want to avoid the pain of losing money, right, in the markets. That being said, if you have very good reasons, like you haven't slept well or you're not concentrated, reducing your risk by sizing down or staying out of the markets, whatever, is absolutely justified. So there's some nuance to that, but it can also be just out of fear. So, and now we all have been there. You trade and it is all it runs very well, and then inevitably there's the loser, there's the next loser, and then your reptile brain wants equilibrium, and then you revenge trade, and then you go on full-blown tilt until you blow up, right? So, and then you're all crushed, and the realization that money is gone slowly sets in, and your confidence is very low, and you're angry, and you go through all of those processes until you finally accept that, and then you sit down and be like, fuck it, now I will make that rule book, right? I will write down what I will do. Here are my rules, right? So, and then you open the PowerPoint presentation. Rule number 1, after 3 consecutive losses, I will stop trading. So the second rule is, it's either stop loss or take profit, right? The third rule is whatever, you get the point. So you write down all those rules, and then you trade and trade and trade, and eventually you break all of them. Yeah. So why is that? Because you wrote the rules with your rational brain, and unfortunately, the reptile brain is faster. It sits next to the amygdala. It needs to be faster, right? Think of that saber-tooth example. So before you even think about your rules or whatever, you're in a fight, flight, or freeze state, and do the same shit all over again. So that's why all your rules and all your post-its and whatever you put there on your screens, unfortunately, will not do the trick, right? You have to do something about the mental aspects of trading. So there's several ways to do that. Mark Douglas, for example, he says, you can try to override your detrimental behaviors by good behavior. So you do that 20 trades exercise of Mark Douglas, keep it all mechanical and just execute, take each and every trade without fear or hesitation, yada, yada, yada. There's Tom Hougaard, who has his book of horror, who primes himself before every session. There's a lot of tools available. I believe we are all individuals. I would encourage you to read a little bit on the mental aspects of trading. Read Mark Douglas, read Steve Ward, read Tom's book, Best Loser Wins, and work on that. Your growth lies in the work that you are avoiding. Steve Ward was standing there, 2022. Tom made a day trading symposium in London, and he also invited Steve Ward to speak. He's a trading psychologist. He works with high-stakes traders, hedge fund managers, whatever. Very eloquent man, also. But he said something very interesting. He didn't say the percentage of how much do the mental aspects of trading contribute to your success in trading, right? He didn't say the percentage, smart man, because it's hard to say, but he asked the audience, and the audience, they're ballparking it at around 70%. So 70% mental aspects of trading. So, and now let me ask you this. He asked the audience, so how much are you working on the mental aspects of trading? Whoa, silence. Yeah. That's the work you're avoiding. And that's why, Henrik, you probably took trades you didn't want to, and yeah. And probably what you should do about it. I'm not a trading psychologist. I can only tell you a mental model to make sense of what's happening, right? And point you into the direction. So maybe work on that. All right. So, ladies and gentlemen, I would say we do questions time. Wow, there's so many questions. Okay, this one was just let's go Grumpy, make some money. That was before the open. We made a little bit. Tim from Slovenia. Hi, just reminder you have US 100. Okay, I don't know what you mean. Probably I confused here something. Morning, Andi. Please, can you let me know how much US dollar per point you're trading? It's right here. $0.50 per point, brother. Risking $60 or something per trade. You changed your hairstyle. You look younger. Yeah, well, that's how I look when I go fresh out of the shower. Usually I do a little bit of styling cream in there, you know. There you go. So, Nikolai, thank you, Andy. You're awesome. Oh, you're very welcome. Don't know for what. But hey. Hello, Andy. Thanks for showing up. In Tom's absence, Tom is GOAT. His 10-minute breakout worked really well in Nasdaq today. There you go. My man Sven makes big money today. Was stuck in a long position and then finally Well done, brother. Stefan says, I did not get mad, I just challenged him, and by now I apologize to him. Ah, you were that? Okay. You are a great man. We can have disagreements, but the greater man usually is the one who opens up to the possibility that the other person viewpoint also has some merit to it. So I commend you for that. Well done. Of course, you are allowed to disagree with Tom, even though Tom is the authority, right here. I'm kidding. You can not that Tom is an authority. He undoubtedly is, but of course you can be in disagreement with Tom. Just keep it civil. Don't be angry. Tom is a man who just follows his convictions and puts his actions where his words are, and he always has. So can't blame him for that, really. Susanne, can you talk about the first 15-minute bar with second 15-minute bar inside first 15-minute bar and what that could mean for price direction? Dow currently in that situation. Okay. Yeah. So first 15-minute bar, second 15-minute bar, more or less inside the first 15-minute bar. Just apart from that little tail here, right? That little bit of the upper shadow that poking out. Usually an inside bar should be inside the confinement of the range of the previous bar, right? But, you know, and the textbook would even allow that it's the same height. Everything above that is technically not an inside bar. However, Susanne, there's a difference between theory and practice. The market doesn't always give you picture-perfect examples, right? And also, CFD charts might differ a tiny little bit from future charts, especially with the tails. So, yeah. So maybe you're looking at a future chart and there's a perfect inside bar. I don't know. So what does that mean? Inside bar usually means indecisiveness. Neither side, neither bulls or bear want to commit yet. And also you see that an inside bar, now you have an inside bar so far, is you get on a lower time frame that looks more or less like a triangle. Can you see that? Yeah. So that means the market accelerates in moves inside smaller and smaller space before it eventually might break out. In which direction? I don't know. Looks more bullish to me right now, I would say, based on the 5-minute structure. Could see a breakout to the north. But so far, nobody's ready to commit. Market is further contracting. So, what does that mean for the school run? Usually means that this is more indicative of trading range behavior, and that you don't get a clean breakout after. The odds are that the market rather trades back into the range. So that would mean that usually the ante makes more sense, but guys, take that with a grain of salt. There is still a lot of research to be done. But usually, if you have an inside bar as the signal bar, usually that means anti. There have been examples where that failed miserably. Wasn't it yesterday that there was an inside bar and then the regular school run was really, I don't know. So, however, now we have a consecutive inside bar. We didn't even trigger school run yet. And now 5 minutes to go is so far still an inside bar. And a couple of minutes ago, I started to explain, looks like more bullish now. Now we're trading slightly below previous bar. So can break out in both directions. Now, right now, I would expect more a breakout because of that triangle structure. Does that override the school run? I don't know. I'm out already. Luckily, I don't need to decide that. Oh, Konstantin from the USA said you once made a brilliant comment, which I stole immediately, that you generally don't use trend lines because they are too subjective as opposed to horizontal support resistance. Are there other commonly used tools you disregard? Thank you for your work. I mean, it's I'm a simple man, brother. I don't always draw those lines. It doesn't mean that I don't look at them. I look at old highs and lows that can turn into support and resistance. I look especially at when a stock index is open. Let's call that the session. I mark down the high and the low of that session. What happened here? So the high, the low, and the close. I get that automatically here. Close, I don't do that based on chart, but always what's officially reported. And then, overnight, high and low, right? So it doesn't mean that I don't look at other swings or whatever, but those are really magnets where price is drawn to. Especially I pay attention to the closing price. Other than that, see me often try to measure retracements. So I use my Fibonacci tool here. I don't know if you agree with my levels. I use 50%, which we can all agree happens quite regularly. Then I use 38.2 and 61.8%. And then I basically, why don't I draw channels? Because I can see here, for example, we're making lower highs and lower lows. So yeah, it's a bear channel, right? So the moment we fail to make any of that, we're out of that. So I don't need to draw lines there to see that. So it's a strong bear trend. We print consecutive bear bars closing at their lows. With long bars, long bodies, little overlap. Yeah, I can see that also here. So I really just look at structure and price action. Probably haven't developed the vocabulary to always express what I see or what I sense. A lot of things happen on autopilot. I make an effort to try and narrate a little bit what I see and my decision. I hope that helps. It's all I can say. I'm a simple man. So Søren says Nasdaq looks bullish on a 1 hour chart. A good breakout here now. That was 2 minutes ago. Look on a 1 hour chart. Yeah, it's always the question, is this, are we breaking out of, if you buy now, you're buying into resistance. However, can't ignore this, right? So if you bet on a breakout, you're taking a bet, right? It's a market. Some people might want to take profits here. That might draw in other sellers. However, price might, because of that, get cheaper. That makes it more attractive for buyers. So it might just be a pullback. Of course, even though be mindful that this bar here starts half an hour before the session starts. So let's look at the 30-minute chart. But yeah, 30-minute chart. If you have a bar like that, bull bar like that, closing at its high, and now you have follow through, that is a valid buy, right? So buy that, put your stop loss, I don't know, here maybe or whatever, wherever that idea is invalidated. I usually don't trade like that, but certainly you can trade like that. There's nothing wrong with that. And risk is always that here is resistance, that we will pull back, that you get stopped out. Overall, on a higher time frame even, daily chart. We printed consecutive bear bars, closing at their lows. However, this looks, so far, looks strong. Yeah? So, and also, let's not forget, let's make sure we check on the weekly. Yeah. Up here, we're in all-time highs territory. So it's actually 50% retracement would come in around here. But now we're on a weekly chart, right? So 38.2 comes in around here. It's never picture perfect, right? But that's all within acceptable parameters, right? So we are about to print a weekly bar that made a new low and maybe will close at its high, which is usually also a bullish signal. Call it a pin bar or whatever. So far, if you buy this breakout here directly, my friend, let's say, I don't know what's wrong with those drawing tools. Nothing wrong with that. So, okay, so anyway, Yasur, Andi, what do you think of martingale in markets that are usually in a range like Forex? If you've learned anything, or if you have learned nothing from me or Tom, you know what we don't do in this channel ever. Yasur, we don't add to losing positions. And martingale is just that, right? So you go to the roulette table, you bet on black, now red comes, now you bet on black again, but you double your bet, right? And then if you lose again, you triple. You know, you always double up. Yeah, until you win. Guess what, brother? There's in roulette there's 0, and in this game there is the broker who will charge you for the trade, commissions, and there is risk management, there is margin calls, and all of that stuff. We don't really, just don't do it. And also, I can say it. I don't know how many times do I need to say that I don't trade forex. I'm a stock index trader. I don't trade forex. Nothing wrong with trading forex, but if you say like markets that are usually in a range like forex, I suspect you don't know what a range is. There's certainly trends in forex. Yeah, shall we take a look? Okay, so what pair do we take? Maybe the euro dollar. It's maybe the most liquid market. Euro dollar. There it is. So. Yeah, so what do you think this is here? Does that look to you like a range? It's the daily chart. Let's take the 1 hour. Does this look like a range to you? What are you talking about, man? You probably you might be confused at this point. You're asking questions like I would have, there comes a cable out of your brain, and I could just plug it in here in my head, and I would understand what you mean. You probably need to study a little bit more the foundations of how markets work, how price actions work, and then maybe ask some question. I would urge you not to trade, not to put money on the line. Study a little bit. You probably need to understand a couple basics. The market can go up, down, or sideways, right? Up is an uptrend, down is a downtrend, and sideways is a trading range, right? And Forex or FX or whatever is not a market that is usually in a range, right? So, and martingale is not a good thing. We completely, that's exactly what we don't stand for here at Trader Tom, and I include myself in that. I would never ever add to a loser, ever. So why would I never add to a loser, by the way? Because there's some institutional traders or whatever, some talk about averaging in, make it look fancy, but all they do is adding to losers. Why wouldn't I do that? Because let's look at that. Skuran here, inside bar, more or less, would say anti. Triangle structure would say breakout. So it's a market. If you want to buy, there must be somebody who is willing to sell. And that guy or that institution or that algo or whatever, you can be sure that is not a stupid entity. It's an absolute great reason to sell to you. And otherwise it wouldn't work, right? So there needs to always be somebody taking the opposite side of the trade. And now don't tell me that I'm trading a synthetic instrument, yada, yada, yada. I know that. Again, a concept, right? I'm just explaining a mental model to give you some basics here. So that's how a market works. So at any given time, somebody needs to take the opposite side of a trade. If you want to buy, somebody needs to sell. If you want to sell, somebody needs to buy, right? So, and they all have excellent reasons for that. Can we agree on that? That as a general principle works here. So you don't know what's going to happen because the other party has absolute excellent reasons to do the exact opposite of what you are doing. So we have to manage uncertainty here. So, and then you take your position, you have good reasons, and you have to accept that you can be wrong, because nobody knows what's going to happen. Nobody has a glass ball. So a magic glass ball that you just look inside and that tells you what's going to happen. So you go either long or short. That's what you can do, right? And you might be wrong. So, and why on God's green earth, if you're already wrong and the market is proving that you are wrong, it goes against you, why would you then do the same shit over and over again? Why would you add to that losing position? If you're long and the market goes down and you buy more because it's cheaper, that's supermarket mentality, right? And you buy even more when it's even more cheap. Yeah. So what are you hoping for? That it will magically turn around, or that you get out for zero on a pullback or whatever, and guess who always wins in that equation? The broker. You haven't made a dollar on that trade. In fact, you're losing, and you're adding to your loser, and you always pay commissions, right? So, and what if it doesn't pull back? What if there is really a massive bear breakout and it just shoots down? Seen that. What if that happens? And Miss Margin will call, and then the broker will forcefully liquidate your positions, and you will blow up. Yazur. So, right? I guarantee you that's not a place where you want to be. However, you don't know what's going to happen. For a very good reason, you buy, and then, actually it works. It goes in your favor. So, and then you add to that position. Do you know that it's continuing in your favor, even if you increase your exposure? No. But so far, you have more than just conviction. You have actually confirmation from the market, at least to that point where you add it. You know that you are on the right side of the market. So far, you got confirmation, right? And that's a million times better than hoping for something where you have no evidence that's going to happen. In fact, you have evidence that the exact opposite is going to happen. That's why we add to winners and never add to losers. So, full stop, right? So, you were talking, Yazur, you were talking about two things that make my blood boil here. So, really, don't do that. We don't do martingale here. We don't do any of that shit. We add to winners. We never add to losers. And yeah, and Forex, I don't do Forex, but Forex are not usually in a range. It's nonsense. So, anyway. Woo! Andreas, a comment on Henrik's question. I believe that what he calls his lack of discipline in the system comes from ultimately doubt or lack of conviction in the validity of the system. I think one exercise to get over this hurdle is by doing a simulation run with so many repetitions that he can see his P&L curve going up if he is consistent. Another thing I did for myself is actually to devise a small game of dice in which there are winners and losers, and where the edge is not very big, but over time it will be with an upward slope. Seeing that the outcome doesn't depend on the individual trade really helped my mindset shift. For example, just the system I made for the sake of giving an example. Okay, gotcha. Well, today is a good example of why not to use martingale. Nasdaq up more than 3%. There you go. Well done, Andreas, for devising a system that that helps you. I think that we are trading is a very individual thing, right? So what works for you might very well work for others, but some need maybe a different approach. So that's why I will leave that out there. Um, it's a little bit in principle is what Mark Douglas is doing with his 20 trades exercise, devising a mechanical system, take a fixed amount of risk, uh, define stop loss, define take profit, and then you take every trade without fear or hesitation. You put some money on the line. You determine how much, if all trades go to shit, how much you would lose on that whole exercise. You write it off as the cost of that, and then yeah, you simply execute, and maybe that will override something. Maybe that will condition your mind to do the right thing. For others, they need to maybe dig a little bit in their past. Maybe they had a particularly strong, strict father, felt that we're never good enough, or grew up in communism and think and can't believe that you can make money in a couple of minutes just by clicking the mouse or whatever. You know, there's a lot of things going on. We're all different people. But thank you for that. It's probably helpful to some. So, Farouk says, is this the legend that is the trading master? What do you mean? Tom is the legend, and Tom is the trading master. I'm a mere Padawan here, brother. I'm just here every Wednesday and this week on a summer schedule. Keep it. Tom trades huge size, you know, iron balls. Look at my humble stake size here. So, Victoria. Hi, Andy. I'm very grateful for your work and for sharing online of how you actually trade. Wishing you further prosperity. Thank you, Victoria. So, Andy, what do you think of cutting losses early when you think the trade is no longer valid? Yeah, I love that. Unless it's fear-based, right? But if you have reason to believe that the premise of the trade in the first place and it's not working out, getting out of there is a good idea. So Jai Otisman, brother, I get hundreds of questions here, so don't be so impatient. He sends me here some question marks. So I haven't read that yet. I tried to do that more or less chronologically. So, but this impatient gentleman says, okay, Andy, suppose you took the trade in the NAS at the initial entry. Where and when would you trail the stop loss to break even, or what's the max you'd keep the trade holding? Like, do you plan 100 points or anything? Because in the first 50 to 30 minutes, it already moved a lot, so I got out at just 75 points. But as well as we all see, it moved past the resistance of 27,916 to 953. Who knew? Ha ha ha. Just want your opinion on this, if you feel like it's genuine. Question mark. Question mark. Question mark. Okay. So you want my opinion on that? So you want to look at you want me to look at that again, you know, and feel bad about myself. All right, I will humor you. So let's say I didn't close this trade, right? And then it would shoot up. So I know what my stop loss was maybe 120 points. What is 120 points? Let's measure that. I was down here, huh? I was never in any danger. Oh, now I really feel bad. So, I know, mate. If you, I don't look. I don't trade with rigid rules. I just don't. If you want me to say after I have a 1-to-1 have as much points in profit as my stop loss is, I move stop loss to break even or something. I don't do it like that. I do it. If I say based on gut feeling, that would also that would maybe you would maybe interpret that as Andi does it randomly. I have a couple of thousands of hours of trading the markets in a live environment in so far, and I do a lot of things on autopilot, and I have there probably hundreds of reference points in the back of my head. But let's put it like that. When I feel, and careful with the word feel, but when I feel I have a large enough buffer here, I put stop loss to break even because I rather have a risk-free trade. I might put stop loss to break even very early. You see me sometimes doing that. If I have, again, the feeling, the feeling that the trade might not work out. What would be an example of that? So usually, if you trade, I mean, this is actually a very good example. This is an example where my experience dictated me something, and it actually went completely differently. But yeah, so here's my experience. My experience is if a stock index opens, initial volatility usually breaks support and resistance, and especially early breakout trades, they work out either immediately or not at all. So that's why after 3 minutes, 1, 2, 3, I deleted my orders in the espresso. Here was a long order, there was a short order, and look here on the 4th minute. It's coincidence, but yeah, would have been triggered, and yes, would have been stopped out. Then I saw this here, and we came, bulls pushed it all the way back up here. So I just manually went long, because I also see the bars are moving, and the speed with which they are moving before they close, right? How they expand. If there is, if they sometimes they behave like a rubber band and they snap back. At this point here, I had reason to believe that will break out. That looks like it breaks, because I've seen similar situations hundreds of times. So I went long here again. Yeah, but then, we had this, and then this, and then this, and then this, and I was also fidgeting around with the Dow. So I was short the Dow, long the Nasdaq. I couldn't, in that split view, couldn't click buy or sell. It wouldn't react. So I tried this new grid view here. So I was working with that. So and then I added to the Dow, and then I saw that position been like, how much were we in the negative? Well, 50 points or so, twice. And then I saw that position recovering. So I just wanted to get out of there. And I didn't expect this to happen. I expected this to happen where I bought here. Yeah? So That to me was a complete surprise. But then again, I had a reason to be long here, because I thought that will break out, and then it didn't. So the premise of that, breakouts here should work immediately, but didn't. Took a couple of minutes. Of course, it's tough, but at this point, I didn't believe in that trade anymore, so I tried to close for scratch, right? So anyway, Yortisman says, appreciate your teachings. Just one last thing. Do you think there's an inverse correlation between Dow and Nas? Well, why don't you study that, brother? No, I don't believe there's an inverse correlation. I believe that the Dow and the Nasdaq, I trade them side by side for a very long time. If one is strong and the other weak, that's rare. And if that happens, by strength and sell weakness. So Tom sends me a heart. Okay. Oh, here we go. Paciek from Poland. Dear Andy, how can I contact with support? I can't close my positions from charts. Okay, I found it. Well done for finding the support. Contact yourself and not using me as your personal assistant. Well done. You did very well. I'm proud of you. So, but still open positions. Okay. Shubham. Just one final question. You said if the first 3 minutes it breaks 38 points of Dow, 20 points of Nasdaq, then it can give good moves. But today Nasdaq is at... I think what you mean is the offset for the espresso. Again, brother, give me some context here. Right? So, yeah. So, I don't know, 10 11 years ago, the DAX was trading at 11,000. Back then, you probably could have traded the DAX with a maybe 40-point stop loss, and today you rather need 80 or 90 points, right? So that means, and that's why, I told you guys, I'm not a back tester. I do something that I call research. But exactly how will you tackle that with ATR or something like that? But if you back test the espresso, you need to take into account that the offset historically must have been lower than it is today. Right? So, yeah. So, yeah, in the future, we might need more offset, brother. What can I say? I'm forward testing that. Today, guess what? I put that into the Nasdaq and I have absolutely no clue about the efficacy, the win rate, the expectancy. Yeah. So, how do we find that buffer in the future? I don't know. How do you find a buffer? Why don't you look at the smallest time frame that your broker allows you? It's just one idea. And see what happens. How often would you get prematurely filled? If you didn't use an offset, and then play around with an hypothetical offset until you minimize that. Maybe you can also look at the relation of, let's say you want to trade the espresso in the Nikkei index. I don't know where the Nikkei trades. 58,000 or something like that. Yeah, probably will need a bigger offset there, right? Anyway, that's all I can tell you because that's all I know. However, I want to do a little bit more research on the espresso, maybe together with Tom. Let's see. Look at here. Carlos says espresso worked very well today. For me, in the I believe it's the my brain is just not braining right now. How's that sunny country with sangria called? Spain! In a Spanish index. Right. Well done, brother. Well done. Svetoslav. Bloody hell. Svetoslav is a big motherfucker. Andy, can you show, if you have time, how to add the latest version of the software because there is no more dist folder? Oh. Well. How would I so then let's click here on manage extensions. Let's click remove. So extension is removed. Now let's click do I have anything compromising on my desktop? No, I don't believe I have. So, oops, sorry about that. So let's click load unpacked. Let's go on desktop. This is the extracted zip file, okay? Yeah. Need to extract that. So it looks like that. So, yeah, there is no dist, but who cares, right? So click select folder. And there it is, brother. Probably have to reload now the charts. See if it still works. Open Wall Street. Yep, there you have it. So even if there's no dist folder, it works. Bitteschön. I don't want to give away here personal information, but Svetoslav is a really big guy. So I was like, okay, I better show him that before he gets angry. You know, he lives in Munich, and that is just, I don't know, 4 hours away from Prague. Don't want run into Svetoslav when he's angry. So hope that helps, brother. So, oh my God. So, another gem I can use in my life. My brain is not braining right now. You're welcome. Oh. All right. So, oh, here's a cool username, Making Money Moves. Get ready to be spammed. That's a good way to start a conversation, brother. Guess what? My mouse is already hovering on put to spam here. The next one is he writes, "I love you, brother." Okay, that kind of my finger moves away from the spam this button. I'm blushing and I'm open to read more. Very well done. Very well done. It created anticipation. Sugar-coated it a little bit. Okay, so what do you want? So I look forward to seeing you and Tom weekdays. I appreciate the hard work, discipline. Okay, even more praise. Thank you very much. More than strategies, I appreciate the way you guys helped me to act like a profitable trader. When I started typing this, I remember what I was thought about soul. Unknowingly, this is what you and Tom do all the time, making us holistic traders individuals. Breakdown of the theological soul, mind, in brackets intellect, the seat of thoughts, reasoning, beliefs, memory, and information processing, will, in brackets volition, the engine of choices, decision-making, stubbornness, and self-determination, and finally emotions, in brackets affections, the realm of feelings, desires, passions, and subjective experiences. Ooh, so this I didn't mean to be this spiritual, but if you put it like that, anyway, thank you for that lovely feedback, and holistically, I hope that you become an even better trader and human being. Thank you, brother. So, Adam Jones, really enjoy your analysis and energy, Andy. Addict to Losers is a max game. There you go. You agree with me. Is there a live chat during this? Adam! Oh no, you started so well and now you ask that question. Okay, so maybe you're new to this and you don't know that. So that is, that's okay. The thing is that I get asked 4 questions over and over and over and over again. So guess what? I have devised here a top 4 FAQs for new members. So, and you can find them. I just posted them here. And here you can see comments and live chat are intentionally disabled on YouTube and in this Telegram group. If you have a question, please send either Tom or me a private message on Telegram. Yeah? There you go. I also, I don't know, maybe nobody reads that shit, you know, but before, roughly an hour or so before I start streaming, I post that whole stuff here. And yeah, it's also written here, brother. Comments are disabled both in on YouTube and in this Telegram group, in line with Tom's policy. If I answer questions during the stream, they usually reach me via private Telegram messages. So there's a lot of fake Tom Hougaards out there, and even there are a lot of fake Andis out there. So if you want to find the right Telegram handle, click. If you want to reach Tom, click on this bubble here. If you want to reach me, click on this bubble, and there you go. Hope that helps. So, karaoke live trading session when? I don't know if there's ever a seminar of Tom in Prague again. I might, you know, and it's maybe 2 days. So there's an evening involved, or so. I would take you guys to karaoke. Whoever wants to join, I would do that. So, Adam, you're writing now. I haven't found Tom's handle for messages. I said click on the bubble with Tom's hat on. Click on the bubble. I believe in you. You can do it. You can do it, brother. So, Matt from the USA asks, why don't you or Tom ever use volume when looking at the charts? Why would we? Do you think that's something that is superior to the way I trade or Tom trades? Maybe. I don't know. I haven't used it. I don't need it. I don't feel like volume would make a difference, honestly. So if you have, if you use volume and you use entry techniques or strategies that involve using volume, maybe it's unthinkable to you that others don't use that. So trading is trading. There's so many different styles, instruments, time frames. Keep an open mind that there is no right or wrong as long as we make money. It's what we use is good enough. So that doesn't mean that I don't want to keep an open mind and look into other techniques. So I don't dismiss volume. I just don't believe that it would add anything significantly useful to my style of trading. It really doesn't. Because I trade price action and Tom Hougaard style situational analysis trades. That's how I would describe it. And whether there is volume or not, don't care. Maybe you can expand on that, why you think that volume is superior. Would love to hear your take on it. Karaoke Andi, good trades. Good traded the Dow. Got a question. Quinha from the Netherlands. Is it possible to be consistent, profitable with a tested strategy with an edge like one of Tom's strategies and follow it rigidly, no exception, steady stop loss, steady take profit? I know where you're coming from. No, it isn't. I haven't seen, and that's just me. Yeah, maybe some of you guys have actually seen it, but I haven't seen a purely, and I say purely mechanical approach that has always worked and will forever work in all eternity. Because markets change, market conditions change. So you need to, so edge depreciation is real, right? The reason why Tom Hougaard, for example, has passed the test of time is that it's not that rigid, right? It's a simple breakout strategy, and there is no exit rule. So the exit is discretionary. So that means that the Hougaard is not really a mechanical strategy. It's a mechanical entry technique, but where you exit, that's up to you. So, and there is more the philosophy that that Tom has. Okay, if I'm in that move, I want to stay in and I want to make my position bigger and bigger and bigger, and then takes a whole lot. And that's why Tom makes money. Seriously, that's it, because he adds to his winners, right? Not because his strategy is so superior, even though it's quite good actually. So, right? So, and I'm also, I think, more of a discretionary trader than a rigid rule-based trader. I think I always quote him lately. I think it was really Ed Kota who said that the market will be what you want the market to be, or something like that. So if you want that all rigid and rule-based and risk to reward and win rate and all of that, then the market will probably be that for you. You will end up being an analytical nerd who can't pull the trigger or whatever. I don't know. Anyway, so hope that helps. If you have a mechanical approach that works, and I'm not saying that doesn't exist, I'm saying specifically that doesn't exist over a long period of time. So that means you need to constantly be on the lookout for other mechanical approaches. Always check if they're still working. Backtest, yes. Tweak it. Flip out those that don't work right now, or put them back into the rotation if they start working again. And once you're doing that, you could as well, make a business out of it and and do that for a living and build bots who do all of that on autopilot. Because if it's so rigid, and everything is predefined, why do you bother even trading that yourself, right? You can just ask, I don't know, ChatGPT or Claude or whatever to program you, how are they called, expert advisor for MT4 or MT5. There's a million brokers out there who support that platform. Even Trade Nation has MT4 support, but you don't get fixed spreads there. But anyway, right? So that would be the game that you're playing. However, Mark Douglas, I believe, said that the trader develops from mechanical to discretionary to intuitive or intuitional. Does that exist in English? I don't know. So that means at the beginning, I think a more rigid and mechanical approach is not bad to learn the ropes, right? Because it gives you a more strict framework. Otherwise, if you have all the options, then you don't know what to do. You get easily overwhelmed, right? So and then you trade that for a while like that, and then maybe you at one point you start to see like, okay, but that looks like, you probably just get a feel like that, but that looks weak. That looks like it will go further down. Why wouldn't we get the third leg now? And you start asking those questions, and then suddenly you maybe dare to dismiss your rigid exit rule and be like, no, maybe the market will give me more today than my 2-to-1, right? Or whatever you're after. And you think, you know what? That really goes down. Maybe I add here. That's how you develop a discretionary skill set, which ultimately I believe is the holy grail, right? That's where we humans still have a reason to be trading in a world where already algos of institutions are battling it out. Oh, Trump has posted something. Todd Blanche is a star and everybody knows it. I don't know who Todd Blanche is. Don't tell me who Todd Blanche is, please. I don't really. Okay, probably posted that twice, or that indicator just posted that twice. Yeah, Conrad pointed out that on CFDs and for the UK people, spread betting, that's basically the same. It's called spread betting because it has something to do with your tax rules in the UK. But it's the same thing. So Conrad points out rightfully that volume here that we get reported is not real volume. Yeah, so you would have to trade futures or pay for that or whatever. On the other hand, if it works for someone, then keep using it. Correct. So, look. If I couldn't live without volume, I would just pay for some live data and have trading view open. Or I would make it work, right? I would get my volume. Or would use the Wolfix platform or whatever, I know all of that shit, but I don't use it. So, but there are some people out there who use it and do very well. There's no reason for me to question that. Oh, Richard is writing a lot. Forex hasn't trended for a while, but I've traded cable at, okay. Cable is probably the sterling dollar, right? They call it cable. So it does at time, yeah. But correct, yeah. So that depends on the time frame, right? So but you can discern, like when I look at a random chart, there is, look, this is the fucking 5-minute chart of the Dow Jones. I would call that here a downtrend. right? I would call this a trading range. Yeah. So I think there's or does it have to be on the daily chart or whatever or monthly? If it's a stock index, of course, if I zoom out, stock indices, they go up over time, right? It's just sometimes bear markets, but over time they always have gone up, especially the American indices. So I would say, yeah, there is a underlying trend. Whatever. So I've got so many questions. Bloody hell! I will try to choose. Forex is for kids. I said that, right? I was just joking. Please, all Forex traders, don't hate me for saying that. I was just joking. And yeah, spread betting in the UK is tax-free. I think I understand that. So if you ever hear, if you're not a UK resident, or if you've never been really, if you have never looked into the tax regime of the United Kingdom, or if you ever wondered what spread betting is, because the UK traders, they will just not shut up about it. They will always say spread betting or whatever. Actually, what that is that the UK is an ancient civilization, right? Ancient. They have still lords, and a lower chamber and an upper chamber, and their parliament is actually in the lower chamber, and still there's the upper chamber, and there are the lords, And back in the day when Queen Victoria was reigning, and the lords, and that was all important and whatever. So back in the day, there were just people who were fortunate enough to never need to really work in their life. That is bourgeois. That's for the peasants. That's for us, right? Because they are blue-blooded. They're born to be a lord, or whatever, or a duke, or a count, or maybe even a prince, or a king, or a queen, or princess. So. And those still exist, especially in the United Kingdom, but especially back in the day, that was, and it's still a very class conscious society. This clear separation between, us and them above there. So they above there, since they didn't need to work, like us peasants, right? So the lords, what do they do with all that time? They have those huge estates, and money is not something that you talk about because you just have it, right? It's a nice position to be in. So the lords, they want to indulge themselves in, especially, back in the day, more of a patriarchy system, I believe. But Queen Victoria kind of was the most powerful queen in history, you could say. Anyway, but I would imagine that some lords would want to indulge in some gentlemanly activities, yeah, like gambling or horse racing and whatever. And then with the other lords, they would bet on horses, and and sometimes you win, sometimes you lose. I don't think that trading is gambling, but for them it's just entertainment. But yeah. And then suddenly they realize, oh fuck, I have to pay taxes on those profits. And then the lords were like, no, we don't pay taxes on that. Yeah, but it's the law. Yeah, but we are the lords. We sit in the upper chamber. We can make the rules. So guess what? They made betting generally tax-free, tax-exempt. So they can just play whatever, bridge or poker, or bet on horses and all of that. So, and since it's an ancient culture, and some of those old ancient crusty structures still exist, they also, under those ancient tax exemption rules, they for some reason wanted to put trading as well. So That's why they call it spread betting. Yeah, you're not betting on a horse race; you bet on the spread. But what that really is CFD trading, right? So that's it. If you open a Trade Nation account, a CFD account, or in the UK a spread betting account, looks exactly the same, trades exactly the same. There's absolutely no difference. Yeah, maybe there is, maybe the leverage is capped or whatever. And yeah, it's tax exempt, but it can't be your only source of income. You can be, I don't know, an Uber driver or whatever, doesn't matter. Can make millions trading, will be tax free, but your main activity you will report to the tax authority is that you're an Uber driver or whatever you're doing, right? So that's spread betting, ladies and gentlemen, if you ever wondered. So did I say that correctly? Oh, now the Brits will probably roast me. No, Andy, it's not like that. It's like So, Dr. Jonah from Ethiopia. Hi, dear karaoke. You really think that's my first name, right? You think that my first name is Karaoke and my family name is Andy. Dr. Jonah G. My G. Do you think that? So, anyway, hi, dear Karaoke. It's just fine to watch Al Brooks' mentorship videos. Is there a question? Why are you so lazy? Type a proper question. I don't know. Are there even Al Brooks mentorship videos? Is there Al Brooks mentorship available? Or do you mean recordings of seminars? Or be specific. Man. Yeah, there that is. Spread betting in the UK is tax-free. Max 1 to 30 leverage. All right. So I didn't say complete. You are absolutely correct about the spread betting rules. Okay, so I didn't talk all nonsense here. Fishing on Nasdaq forming, looking good for selling short. Yeah, but needs to close below the bar that makes the new high, right? So Adam again, and you mentioned that your first trade was a large loss. How did you rebuild the confidence to trade again after that and get past fear of trading? Thank you. What can I say? I was just arrogant. I had a modicum of success in another career, and I felt like, yeah, I will figure that one out, right? So the market kind of humbled me, and I sized down considerably, and I was like, at one point, I was like, maybe I should learn from the right people, and having a well-attuned bullshit parameter, I found very fast. I found Tom and decided, yep, that's the guy. So I never look. I changed careers in my 40s when I already had family, and when you should have your shit together. I had a very well running consultancy, just a one-man show, but I was always booked out, and then COVID came, and then I wasn't at all. So took a risk here, took a leap of faith, but it was also my only option, because what would be, you know, with 50 again applying for a job, is that, or asking my wife to pay the bills is not something that I'm I don't know, I'm maybe old school in that sense, but giving up was just not an option. So still a continuous journey, and I'm nowhere near where Tom is, that you so frequently diss for not taking profits. When in fact, that is his ability to just stay in there is just absolutely incredible. So Somebody's sharing here some insights of Dr. David Paul. And I know you're joking, but you have made me have to reply to you. Before 2001, you had to pay 6.75% tax on every bet in the UK. I worked for one of the biggest bookies for a decade from 1999 to 2009 and went through that change and computerization in 2004 or 5. Looking back, I wonder how the hell I did the math working it out for a few hundreds bets a day. Wow. Bloody hell. I didn't know that. So that's more a recent thing. I thought it's okay. At one point they had to probably use that ancient tax exemption construct and put trading under, right? So thank you for. I'm not sure I want to share a PDF, but Dr. David Paul was a dear friend of Tom, and infinite wisdom found in there. And you find Tom did that symposium in London in 22, and I think Tom has released a lot of the recordings from that symposium. Also, David Paul was on stage there for many hours, and that's certainly, you find that on YouTube, right? So retrospective analysis is always easy, exactly. Well, with perfect hindsight, we all have very good explanations why what happened, why something happened, right? But when we're in the trenches, not so much. Anyways, guys, thank you for all your questions. At this point, I'm overwhelmed. Also for all that beautiful feedback that I received from you. We've been streaming for 2 hours. It was an absolute pleasure being here with you. Tomorrow, last day before the channel will be closed till the 24th of August, where you will get me another week straight, where I fly solo. And after that, 1 week Tom, and then regular schedule till end of the year. So tomorrow, last day before the summer close. All right. Thank you very much. Karaoke Andy.